Global markets are shifting, macro pressure is building, and XRP is once again at the center of a major structural development that could quietly reshape its long-term outlook. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP. So be sure to stay focused, as you surely don't want to miss out on this. If you're new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. Please remember, this is not a financial advice video. The broader financial market is experiencing renewed pressure, and this shift is not isolated to crypto alone. One of the primary drivers behind the recent pullback is emerging macroeconomic policy from Japan. Reports indicate that the Bank of Japan is preparing to raise interest rates at its upcoming December 19th meeting, with internal discussions suggesting that additional rate hikes could extend into 2026. As soon as this information surfaced, risk assets across the board reacted. Equity softened, crypto followed, and volatility picked up across multiple markets. This reaction was not unexpected. For weeks, markets have shown hesitation, largely moving sideways as participants waited for confirmation of tighter monetary conditions. Cryptocurrencies, being positioned higher on the risk spectrum, tend to respond faster and more aggressively to these developments. As a result, XRP briefly moved below the $2 level again. Bitcoin slipped under $90,000, and Ethereum tested levels near $3,000 before stabilizing. These moves were mirrored by weakness in traditional markets, including declines in major indices like the S&P 500. Despite the sell-off, overall market stress remains relatively controlled. Volatility measures increased on the news, but are still sitting at levels that historically do not signal panic. However, Fridays often bring additional complexity due to options expirations, which can amplify short-term price movements. Liquidity can thin out, positioning can shift rapidly, and price action may appear exaggerated without reflecting deeper fundamentals. This dynamic is also visible in crypto, especially as ETFs and large institutional flows increasingly track equity market behavior. Importantly, this short-term weakness is not tied to XRP-specific fundamentals. Instead, it reflects a broader de-risking environment driven by global monetary policy. Against this backdrop, XRP has actually shown relative resilience. While several major digital assets recorded steeper percentage declines, XRP's pullback remained comparatively modest, suggesting underlying support and stronger sentiment beneath the surface. At the same time, significant developments are unfolding at the corporate and regulatory level for Ripple. Ripple has received conditional approval from the U.S. Office of the Comptroller of the Currency to charter a national trust bank. This approval places Ripple under direct federal oversight alongside state-level supervision, setting a high bar for compliance and governance. This move is particularly important for RLUSD and Ripple's broader stablecoin strategy, as it aligns the company with the most stringent regulatory frameworks in the United States. This approval is not happening in isolation. Other major institutions in the digital asset space, including well-known custodians and stablecoin issuers, have received similar conditional approvals. This signals a broader institutional shift toward regulatory clarity and formal integration with the traditional financial system. For Ripple, this step reinforces its long-standing emphasis on compliance, trust, and real-world utility, rather than short-term narratives. While this development does not directly alter XRP's immediate price mechanics, its long-term implications are substantial. Regulatory legitimacy changes how Ripple is perceived by banks, governments, and large financial institutions. It influences which assets and networks are trusted for settlement, liquidity, and cross-border payments. Over time, this credibility can translate into increased activity on the XRP ledger, which ultimately supports XRP's role within the ecosystem. Market sentiment around Ripple has also evolved as a result of this move. Longtime observers who were once cautious about Ripple's strategic direction have publicly acknowledged that this level of regulatory scrutiny is not something a company embraces unless it is committed to long-term infrastructure building. Submitting to federal and state oversight signals confidence, durability, and an intention to operate at the core of the global financial system for decades rather than quarters. Alongside regulatory progress, Ripple continues to expand its global footprint. A major European banking institution has gone live with Ripple payments, becoming one of the first in the region to actively bridge traditional fiat systems with blockchain-based settlement. This integration addresses a long-standing friction point for institutions that require fast, compliant, and efficient cross-border transactions. It also builds upon earlier adoption of RLUSD, reinforcing Ripple's growing role in regulated financial corridors. These developments reflect a broader transformation within Ripple as a company. Strategic acquisitions, expanding product offerings, and deeper institutional partnerships all point toward a more mature phase of growth. While questions remain around how Ripple may adjust its long-term XRP holdings or treasury strategy, the foundation being built suggests a deliberate and structured approach rather than reactive decision-making. In the near term, macro conditions continue to dominate price action. Liquidity remains cautious, many market participants are sidelined, and buying pressure is limited. In a different environment, similar news could have triggered a stronger immediate response. Instead, XRP is holding relatively steady while other assets experience sharper declines. That relative strength may not be dramatic, but it is notable. Short-term price movements remain unpredictable and heavily influenced by external factors such as interest rate expectations and global risk sentiment. However, when viewed through a longer-term lens, the trajectory becomes clearer. Regulatory clarity, institutional adoption, and infrastructure-level integration are all aligning in a way that strengthens Ripple's position within global finance. As these elements compound over time, they have the potential to support XRP's relevance and utility well beyond current market cycles. While day-to-day volatility will continue, the broader picture suggests that XRP is entering a phase defined less by speculation and more by structural development. In an environment where many assets struggle to demonstrate real-world alignment, this distinction matters, and it may prove increasingly important as the market matures. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Thank you for watching, and we will see you again in the next video. Goodbye.